Welcome back. This is RER Deals of the Week. I'm Ankit.
I'm Jeff.
We're going to be chatting about deals this time. We're expanding our zone a little bit more, and we're talking about deals in Newark and in Jersey City because we are playing in both markets. Both markets really work for our strategy of multifamily buy and holds, buy and flips. So we're going to go back and forth on that. So we'll start first with Newark and this side of the neck of the woods in Essex County. One of the deals that we have for you, the first deal that I got for you was 7 Clark Street. We'll go through the assumptions on this one a little bit prior to jumping into the deal. The assumptions are 100% of list price, 5% for a 30-year mortgage, insurance was $1,500, management fees 8% of each month's rent, 1% for maintenance, $92 per unit for utility costs, 25% down payment, and about a 9.1% vacancy factor. Now remember, this is a general assumptions to be able to provide you guys deals of the week, but they'll change from section to section. It's important as an investor to be able to note that. So what do we got? We got first deal we got is 7 Clark Street. For my recommendation, it's a buy and hold project. It's located in the Mount Pleasant Lower Broadway section of Newark. It's 23 rooms. It's a 4-family asset. It's a big property. It's got 15 bedrooms, 4 bathrooms. So you got 3 units, 3 bedrooms in the first unit, 4, 4, and 4. So big property. That's why I like it as a lot. It's really close to Rutgers University. It's on the other side of 280, which we believe is a good playable market eventually down the line for student housing. So you got some appreciation up play for the location itself. Based on market cash flow, we're looking at about a 16% cap. Now, it is rented under market currently, so it's a value play both in the asset itself and the location. Jeff, what do you got for these?
Other property we have is 185-187 12th Ave. This is a new construction 3-family buy and flip. It's currently a bank-owned distressed property. It's been vandalized, so you're missing the standard components, your plumbing, your heating units. Those are going to need to be replaced and some cosmetic repairs as well. But all in all, it's got great bones. It's a new construction property, very desirable area on 12th Ave, right off the back of the UMD&J campus, which is an area that we're highly focused on and a lot of other investors are playing in as well. For the pickup price of $184,500, you got some pretty good upside potential. After putting in about 50 grand of work, we're estimating, that's the 3 heating units, all the plumbing, and the cosmetic repairs as well. The major stuff is in good condition, but you got 3 units, 9 bedrooms, 6 bathrooms, the Fairmont area, like we said. Your approximate resale value here, your market comps are coming out at just over 300, 330, 350 at most, but because it's new construction, this has definitely got some appreciation potential. And potential profit on the deal is over $40,000, over $45,000, and your ROI is close to 20%, which makes it a really strong candidate for a good, quick buy and flip there.
Right. The only thing to note in this property is the fact that there is a high tax rate burn. The taxes are about $11,000, so keep that in mind as you go through the construction process and the lease-up process, because that can eat up your profit line. So those are our deals for Newark. If you guys have any questions on them, please feel free to email us at deals@rernj.com or call us at 973-894-3004. So now flipping over to the other side, closer to the Hudson River, what do we got for them, Jeff, this week for Jersey City's market?
Well, this is a new market that we're taking a look at now, Jersey City. It's an area that we've been investing in, but we wanted to bring some deals to you from there as well as we expand our coverage. We'll go through the assumptions for Jersey City, and you'll notice they're very similar to Newark. It's not a very different market in terms of the demographics or the expenses there. Same thing, we're going to use 100% of list price. Obviously, your mortgage rate is going to be the same as well. Insurance, we're doing $1,500 a year as well. Your management is going to be about the same. Vacancy, we're also using the same because our analysis shows it to be comparable. So the deals we have, and we've got a couple here, all different options for you. First one, we have 36 Union Street. This is a new construction 2-family in the Bergen-Lafayette area, priced at $175 about, which is a pretty good discount to some of the comps we see going on the market. Comps are about $225-ish for this kind of property, so you got a discount there. The other potential area, the other upside on the property is the area. Now, Ankit, I know, has done a little more research, so he wanted to jump in on that.
Sure. I mean, the area is Bergen-Lafayette. It's close to McKinley Square, and it's an up-and-coming neighborhood given the fact there's a lot of redevelopment plans happening in this neighborhood and close to McKinley, so it's a flow-over effect. real estate at the end of the day moves in cycles or patterns, and as it flows from a good area to a worse area because people get priced out to either buy or to rent. So you're starting to see that happen in Jersey City right now. Jersey City is getting really hot in Grove Street, it's getting really hot in the Heights and in Journal Square, and you're starting to see a flow-over impact into McKinley Square and Bergen Lafayette. So that's a great position play to be in, where you're able to buy an asset, like Jeff said, with good cash flow yields and be able to kind of like ride the position of the area itself. So Jeff, what's their cash flow yields on this asset look like?
That's another benefit of the property. While you wait for that to happen, like you said, you got that flow-over effect, and you're only about 2 blocks from the light rail, which goes straight into downtown. You're getting cash flow yields of 26-25% and cap rates of over 11%. So not a bad play there.
In Jersey City, that's really hard to find. So 11% plus in not a Greenville location, it's a good find in terms of that. So that's definitely a good deal from our side for
Absolutely.
that area. Jeff, what else we got for them?
The next deal we got is 157 Bayview Ave. This is an attached 2-family, small property, but a great cash flow buy and hold. It is in the northern section of Greenville, not the most desirable area, but again, you're taking on that reward for that little bit of risk. The cash flow on this one, you're looking at about 20%. It's fully occupied. It's been renovated. There's really nothing to do. This is a turnkey property with Section 8 tenants in place. So you're just really taking that over for the cash flow, and at the 190 pickup price, not a bad purchase.
I don't know. From my side, I'm not that happy with that deal. It's an under 10 cap in Greenville. I mean, just to drive in that area for me to feel comfortable, I got to be north of a 12 cap at least to be able to get something for that. I mean, I got the risk that, hey, my car might get broken into when I get out there to collect my rents.
That is true. You got to watch out for the area. But again, this is a street-by-street thing in that area. This is not the heart of Greenville, so you can be a little bit safer there. But if you're looking for a turnkey property, this is the one. If you don't want to put in that work and take on that risk of construction.
So like you were saying, it's a block-by-block scenario, especially in urban neighbor markets or urban neighborhood markets like Jersey City, like Newark. A one block can make a huge difference to the next block. So keep that in mind as you're investing, because not all parts of Greenville are bad, and not all parts of McKinley Square are great either. So it's a balance that you have to be able to play while you're making that investment decisions or what deals to buy to throw your capital into.
Absolutely.
So what else we got for that?
Our final deal here is 111 Thorn Street. This is a 3-family in the Heights, so now you're moving into a really desirable area, which is why I'm excited about this deal. This is a different strategy. This is a repositioning play for the asset. At the pickup price, you're paying about market. However, the real upside here is to reposition the asset in terms of tenant rent roll. Currently, it's severely under rented from our analysis. You're getting 2 bedrooms and 3 bedrooms at about $800 or $900. Those can be upticked easily to $1,400 or $1,500, which really shows strong upside potential in the rent roll, thereby increasing your cap rate and your income from this asset. Currently, it's not a great income play, but once that's repositioned, you're going to increase the value of the asset and you're going to increase your cash flow to yields that are much more attractive.
So, like Jeff said, in good neighborhoods, it's hard to find discounted deals. You're not necessarily going to be able to find those as easily as you may find them in a Bergen Lafayette or even a Greenville, because not that many properties that are going to go distressed, and if they are going to go distressed, people are going to pay pretty much market to be able to acquire them. Am I right or wrong on that, Jeff?
Absolutely.
So you got to find plays like this where you can take a rental income or you can take space that's being underutilized and really expand it. Maybe it's somebody has a really big den that can be turned into an extra bedroom. Well, that's a play that you have to be able to make, and that's how you're going to create value. So you truly have to be a creative investor in these better neighborhoods if you want to create cash flow. You're going to get a lower yield, yes, but you're in a better neighborhood, and you got a higher upside play in the appreciation factor. Remember, real estate has 2 components to your return. One, income, cash flow. Huge part of my game. Appreciation is the other piece of it, or buying it under discounted to market value today. So in this scenario, you definitely have the appreciation upside. Jeff, what's your deal of the week, I guess, for Jersey City? Let's start with that side.
Jersey City, I'm going to go with the first one on Union Ave.
You're going to go the first one on Union Ave?
Or Union Street, I'm sorry.
Union Street, with the Bergen Lafayette play and the 11% cap rate?
That one's providing good cash flow. It's got good upside potential. I think that's the best of both worlds in this situation.
You know what? From my side, I actually like 111 Thorn Street, just because I'm biased. It's kind of like the Indian territory in the Indian district, and I haven't really invested in a deal out there. So I can definitely create value upside. I consider myself a creative investor, and it's got a good locational value that, hey, you know, when the market does, Grove Street does pick up a lot, and Heights goes next, I'm hoping that's what I'm going to bank on a little bit more. So I'll take the lower yield for the better neighborhood and a higher upside potential on the appreciation side.
Absolutely.
So that's my deal of the week for Jersey City. What do you got for Newark?
For Newark, I like 7 Clark Street.
We actually agree for the first time. 7 Clark Street, that's a good deal. 4-unit property, $297, across the street, or kind of really close to Rutgers University. It's got the high cap rate potential, and you gotta remember, this is based on market caps at 16%. Currently, it is under rented. You got 4 bedrooms being rented at $1,100. That's really low for that neighborhood, so you can definitely have some upside value potential there. It's not a flip asset, it's a buy and hold asset, but it's a good location, good density. You're not going to get, compressed in value too much because there's not many floors to begin with out there.
Absolutely.
So take a look at that as a buy and hold potential investment. So from my side also, 7 Clark Street is a deal of the week. We appreciate you tuning into this lengthier episode that we have going on, and we hope to bring you more deals both in Newark and Jersey City because we really believe in those 2 markets, and hope to see you guys next week. I'm Ankit.
I'm Jeff.
This is RER Deals of the Week. See you guys next week.